And so that's the only kind of buying you're going to see. And the drop in sales of all things is going to continue. Now, we're going to get a sideways hiatus here that'll stretch from this month probably for about a year, maybe as much as a year and a half, where the GDP, which is minus 6.3 in the last quarter of last year, and minus 6.1% in the first quarter, it'll probably be 5% in the second quarter, 4% in the third and fourth quarter, because of the stimulus and the money that's being shoveled into the economy by the Treasury and the Fed. Next year it could get down to even, but that's the best it's going to do. And unemployment's still going to climb. We're looking at a minimum of 22% this year. It's 19.2 to 19.8% right now. And the following year we're going to see 35%. And that's going to be the capper. And I go over all this stuff in the forecaster. So, if you don't subscribe, please do. And get yourself at least an introductory copy. It doesn't cost anything but a phone call to Melody or go to our site. I've got 6 questions here.
I got a bunch of them, too.
Okay, well, maybe we get some dupes here. Date, April 27.
We can.
One from Chris.
I didn't. The 27th.
Yeah. It's one we never got to because it's a long one. Well, let me do it here.
Just go ahead.
Clarification on a previous question. When the subprime crisis appeared, it was an in-your-face problem because people started losing their homes, and it was in the news constantly. In the case of commercial real estate, most of the investors, as I understand it, were venture capitalists, investors with solid net worth on paper, institutionals, companies, perhaps some hedge funds. Most of the commercial investment took place with zero down and or 1% interest, so the banks essentially financed the entire loans, and huge ones. And all of that so far is correct. So now that these investors are walking away from the commercial investments, they have left the banks holding the bag. That's true, too. The banks deserve it for making those kind of loans. Aside from the biggest mall company going bankrupt, actually it was the second biggest, not much is made of the commercial collapse. Well, that's because the media is deliberately keeping it out of the media because they don't want you to know. They couldn't avoid talking about residential because everybody was involved, but the average person doesn't own a commercial building. That has to have been taking place since the beginning of the year and is resulting in more and more ghost malls, empty strip malls, and vacant office parks throughout the country. So then, when exactly will the banks start reporting and coming clean on these ongoing losses? My guess is probably in the third quarter, maybe the second. The third quarter, maybe the fourth. I don't know how they're going to handle it as far as their balance sheet's concerned. Don't forget, the government said, FASB, everything is marked to model, and if you don't do that, we'll chop your head off. And so it's marked to model, which means it can be anything they want it to be. Or maybe they'll put it in some sub-corporation and keep it out of the reporting on the balance sheet. I'm starting to write an article for next Wednesday on fraud. It's overwhelming. I've seen a lot of crime in my life. And, I lived in a poor neighborhood then, and I grew up with crime. It was a way of life. And the crime in the United States government is monumental for this country. All governments are corrupt. There are very few in history that are not. And but the fraud and the crime is just beyond belief. So who knows what commercial real estate is going to be on the books of banks. No. Chris goes on to say, but there will be a specific catalyst, such as Fannie and Freddie going under during subprime. That will send a rapid signal and publicly acknowledge decline in the commercial sector. What will do that? Nothing. They're going to hide it. They're going to hide it. The bank earnings that you just saw for the first quarter were an absolute, total, and thorough fraud. Plain and simple. And do you think it will adversely affect the market in the same way it affected it in October of 2008 when we started to see all of these financial problems, actually the end of July, but the market get hit? And the answer is yes. And that's going to come during the second quarter. The market will continue to deteriorate, and in July it's really going to take a dump. And so it's not far away to answer the question of how long to take it unwind. 4 or 5 years. Commercial, 4 to 5. We're still looking at 2011, 2012, which I go into in the next issue on why, or maybe it's tomorrow's issue, as to why the average home price is going to get down 40 to 50%. I said 35 to 40 5 years ago. And this is beyond what I thought would happen. And that was bad enough. I was a nutcase then. Of course, I'm a genius now for having pegged it. And that's why they have me on all these programs. And I think we're going to see these tail end of the Altas, the prime loans, this isn't in residential, and the option arms over the next 4 years. They're not going to go away. And the government's not going to bail anybody out. Chris's next one comes from the 29th of April. Do you think that there was a downside to the market in May, followed by a summer rally, and then a downside in the fall? It gave 3 examples, and that's what I believe will happen. Down in May, I don't think there'll be much of a rally in the summer. And the fall are going to whack it good again. Next one. This is from Steve. Number 1, the financial commodity and precious metal markets are being ruthlessly manipulated. 2, corporate mainstream media outlets work in tandem with the government to spew lies and brainwash the public. Number 3, money is being printed out of thin air like never before, resulting in the destruction of fiat currencies and an inescapable vortex of debt. How can individuals shield their investment decisions from such machinations to preserve personal wealth? And the only way you can do that is with gold and silver related assets. There is nothing else. And even if gold and silver stayed right where they are and didn't move again for the next 5 years, and what unfolds, if it is what we think it is, hyperinflationary depression, followed by a deflationary depression, means that everything will drop 70, 80, 90% in value. And your gold and silver assets will have held their value. And you can't ask for more than that. That's wealth preservation. If gold goes to $6,000 an ounce, and silver to $100, that's terrific. This is for the Queen Diva from Joe. What effect will a dollar break of 84.50 mean to the markets? Gold topped out with the U.S. dollar at 0.74. Okay, I wasn't aware of that. The bottom on the dollar was 7116, 7116. But the dollar's broken down. We said that 2 months ago. We said it topped out and it was over, and it is. Gold looks to be trading 20% higher premium than the last time the dollar was at 84.50, making $1,200 the next level based on dollar weakness. And what do you think? And that's probably so. Will the silver shares break out before the gold shares? I don't know. They'll probably break out together. Silver seems to be building an enormous pressure based on 09 Eagle sales and COMEX delivery schedules. We'll have to see what the deliveries were today. It's going to be interesting in both silver and gold from COMEX.